Have you ever been to the Cheesecake Factory? The menu, I swear it has 1,000 options and 100 pages, and man, is it exciting. You pour through the pages, you look at the pictures, right? And then the crisis. It's when the waiter or waitress walks over and wants you to make a decision. See, here's what we know. We all love choices and options, but we all hate decisions, and even more than that, we abhor the responsibility for the decision, right? If the food comes back and it doesn't match the picture, we blame the chef, the waiter, the restaurant. If the food comes back and it doesn't match our palate, we blame somebody other than ourselves. We want to be able to pass that blame and to pass that buck. At the end of the day, when we get into the investment world, whether we like it or not, the results we get are your responsibility if you're your own fiduciary. Let's talk through that today on Consider This Program. Well, good morning and welcome back to Consider This Program. I'm your host, Joe Clark.
And I'm Grant Sullivan.
Happy to have you along, Grant, and you guys as well. You being here says a lot about who you are, and we appreciate you taking your time, congratulate you on taking your time to learn more about your finances. Grant and I are talking about this and that today, and we're going to talk about a menu, if you will, of choices and options. Now, like I was saying before we started the program, I like to look at life like a Cheesecake Factory menu, right? When you walk in and you get that thick book, it's like an old set of encyclopedias, right? And you see all of those options that are there. We all love options. We all love choices. Very few of us like decisions. But at the end of the day, we even dislike being responsible for the results even more. And it's kind of like drive-by delegation. So Grant and I have already talked about the difference between suitability and fiduciary. If you missed that, you can always go back to our podcast to Consider This Program, anywhere you listen to that, or to our website, considerthisprogram.com. And find the links to that and go back and listen to the difference between suitability and fiduciary. We are going to talk about the 5 main food groups of investing here in a second. So, Grant, what are they?
Well, food groups I love. Investing I love just as much. And those would be, Joe, when we're talking about the food groups of investing, stocks, bonds, cash, real estate, and commodities.
So I've got $1 million. I'm joking. I don't. I've got $1 million inside of my 401k, and I don't have anything called any of that. How is that possible?
Because, Joe, you have something that's known as a wrapper around all of those. And that would be considered either a mutual fund for some people in 401ks. For us, the Financial Enhancement Group, though, those are exchange-traded funds.
Aha. So I have an exchange-traded fund that has a lot of the 5 food groups in it.
Correct.
Interesting. Okay. Glad to know. Just want, because I know there's people out there that are listening that have mutual funds or have exchange traded funds and they don't have any of the 5 food groups. I did not want you to think you had a dilemma or a problem. I want you to understand. So let's talk about the challenge with these 5 food groups. So how do I break them down? How do I know what I need of which?
I think, Joe, it really comes down to understanding how they function. And what does each do, and how can it either hinder you or improve your situation? So simply put, a stock is ownership in a company. So you're buying ownership into a company. You're hoping that it grows so you can have appreciation, simply put. Obviously, there's more to that than just that. A bond, similarly, you're buying the debt of an organization and hoping to get repaid the full value plus a little bit of extra on top through a coupon. Then there's cash. Cash is always king, right? Doesn't really go up or down a whole lot, especially in today's interest rate environment. But it's a stable, useful capital we can use. Real estate really comes down to farm ground. Is it income-producing real estate, like a farm ground or a building? Is it land? Is it property that you can flip? And there's all kinds of real estate opportunities. And then lastly, commodities. The one people love to talk about, especially today, is oil. That could also be corn, soybeans, lumber. That was a big one a few months ago. Gold's another big one. And so when it comes to understanding what those can do for you, you have to understand what they are.
So there's 5 food groups. So do I put 20% in each of them?
That's a great question. And this, Joe, comes down to assessing your appetite for risk. So we went through what each does or what it's supposed to do. And also, each has kind of its own risk profile. So just like you would go and there's a flavor profile for certain food groups, right? So vegetables, for example, we'll call those bonds just for the discussion, right? They're earthy, they're healthy, right? Or depending on the vegetable. Allegedly, right? And then stocks, for example, right? That could be maybe something sweet, cake, etc. You can't just look at those investments and say, I'll take 20% of each. You have to look at what you're trying to accomplish in your risk profile, in your appetite. So for you and I, if we're going to lift weights, a 20-20-20 all those food groups doesn't help us at all. We need a little more protein, maybe a little more carbohydrate. So if we're getting into retirement or we're looking to accumulate over a period of time, maybe our lineup, our food group balance is a little bit different. So it's really your appetite for risk that you need to evaluate before evaluating how much to put in each category.
So does this change based on my age?
It's another wonderful question. Many times when we have families come into our office, they look at me, they look at you, they look at our other team members and say, I'm getting ready to retire, Joe. I need to dial back my risk. And no, it is not based on age. It is based on the need for the money and what it must do for you over time. I mean, my perspective.
I'm not sure I could have answered it any better.
Oh, well, thank you.
But I'm going to add.
Oh,
right. I am going to. Money is a function of need. Or when I say money, I should say investment. Those food groups are a function of your need at the time. When Barb's grandmother passed away at 98, I had, as a fiduciary, 70% of her money in equities. And there was a reason for that. She hadn't used the money yet. She probably wasn't going to use it before she passed. And my mother-in-law would rather inherit assets that were appreciating as opposed to CDs that were simply paying off an income stream, especially at a low level. That people have a tendency to look in the mirror and go, oh, I'm of this age or I'm that age. Folks, this is almost always in Wall Street's best interest, not in your best interest. Right? You really need to detach yourself or understand the root from where you're being taught things. All right, so when I started teaching, and Grant can testify, when I started teaching at Purdue, first day, class 1, day 1, I stood up there in my suit. He still made fun of me because that's how they had to end, is in their suit and tie doing a presentation. I said, we're going to begin the same way. But I also told them that there are 3 things in Indiana you can't talk about, right? Money, religion, and politics. And those are the rules. They're don't go there. Do not tread on me. Do not bring those up. And I would always start off each class and tell you that I was a Christian conservative that managed money. And big eyes would pop out, and I think Grant's probably some of them. Mouths would fly open. Flies were happy as larks, right? Going, just shocked that somebody in a university setting would say that. And I always told them, and this had nothing to do with me trying to bring my beliefs and my feelings on them. What it had to be was me sharing my bias with them about why I was teaching stuff the way that I was teaching it. I can teach you about a stock and a bond and real estate and commodities and cash, and I can do it agnostically where it is what it is. Here it is. I don't care about it. I don't love it. I hate it. I could do that. But nobody does that, right? We all have a bias. Whether if you don't think you have a bias, you have a bias. That's all I will tell you. You already have preconceived notions and beliefs. And believe me, the people who write articles, whether they're about politics or whether they're about money, right, have an agenda. They have biases that they already have in mind, and getting them to write in a different way is almost it's sacrilege. I mean, it just throws them off their keel. My debate coach back my sophomore year in high school said, Joe, anything you want to find in print to say has already been written. Your job is not to prove the point. Your job is to find the person who's already made the point. Doesn't mean they were right or wrong, by the way. And I would spend 40 hours a week at Bracken Library using microfiche to go through magazines to find articles of some silly person who said something that I needed for a point in a debate. And I've been able to prove my whole life there are a lot of crazy people that are out there. When you read those articles that say this is the amount of stuff that you should have based on age, I always want you to go back to the bias of the author. Where is it? And this is one time where you have to read the fine print. I had somebody who woke up in a panic probably 6 months ago. It's the middle of the pandemic, probably something else going on. But there was an article that came out that said the average American only needed $60,000 a year. It didn't say average, pardon me. An American only needs $60,000 in savings plus Social Security to be able to have a retirement, something like that, right? And I'm reading the article going, this is absolutely insane and absurd and totally wrong. It's written by but a university professor. You get down to the fine print, and it used somebody who had a median income of $44,000 a year. Now, this print was so small, I had to switch glasses to be able to read it, right? This is not the regular print that was inside of the magazine. And that's what goes on. You've got to be able to read the fine print, but always go back to the bias. So when we look at these food groups, we really get into discipline, Grant, right?
Correct.
The discipline of making sure that we have the right percentages for the right reasons.
100%.
Now, one of my favorite expressions is broccoli or chocolate cake.
I had a feeling you were going to go there.
Yeah, that's chocolate. I don't even eat cake, very often.
No, you don't.
Yeah, it's I actually had some for birthday at our small group, but that's another story. But I rarely eat cake. But here's the point: we all know that cake probably tastes better than broccoli, right? I mean, we can all pretty much agree on that. And at the moment in time, right, it's always going to be better to have. You're always going to feel better having the chocolate cake than the broccoli, and you're always going to feel better about having cash rather than a stock on a day the market is going down. Right. And now when the market's going up, suddenly, ding, ding, we would much rather have the stock, right? Or, when all of a sudden inflation is out like crazy, perhaps we want real estate because it tends to appreciate during inflationary periods of time. The point is there's going to be a lot of things that move the needle when it gets into your financial life. You need to understand stocks, bonds, cash, real estate, commodities. You don't need an equal percentage. It has nothing to do with age. It has to do with the need of what you need your money to be able to do. Money is a machine. It is here to serve you. It's not here to be hoarded. It's not here to look cute. You don't get it out and pet it and love it like you do a dog, right? It is here to be able to do good things for you, and you've got to set it up so that it can do its job. And that means it can't be in a mattress, it can't be in the backyard, and it can't be all in one place, including stocks or bonds or all real estate. It needs to be divided up so it can do its job. Forget about the age story. Maintain discipline. Have chocolate cake every now and then, but understand the value of broccoli in your diet when you're getting around to it. Sorry to preach. Hey, go to yourlifeafterwork.com. You don't have to listen to me preach. You can listen to Grant. Get signed up for a Next Steps meeting. We'll give you 90 minutes of our time, complimentary. We'll sit down and give you things that you're going to want to consider today, things to consider in the future, and if we choose to partner together, what FEG will do for you, and Grant will put it in writing.